Hey everybody, Smart Silver Stacker here. It's been a rough couple of days in the markets, a lot of assets getting sold off, even gold and silver taking a hit over the past couple of days, Bitcoin getting absolutely slaughtered, major US stock indexes taking a big hit. But one asset that really hasn't been affected too much has been crude oil. Right now it's still trading around $119 a barrel, and this is the year to date chart for crude oil, and you can see that we are still right around the highs from earlier this year in March of 123 bucks, and that was the spike that we got following the Russian invasion of Ukraine. Since then, the price came down and it sort of resumed its orderly move up that it was already undergoing well before that invasion, as you can see here on this year-to-date chart. Now, why hasn't crude oil sold off like the rest of these assets? Well, as we know, currently the global energy market is extremely tight, especially in Europe and the West, and this is a result of the ongoing geopolitical tensions between the West and Russia, the world's third largest crude oil producer, the supplier of 40% of the European Union's natural gas, and the threats to that supply. Yesterday, I talked about how Libya has shut down their oil fields as a result of fighting between rebel militias in the capital of Tripoli, and that was putting some upward pressure on energy prices. Well, now we've also got Ukraine suspending its exports of natural gas, coal, and fuel oil. And this is pretty understandable why they would do this, as they are currently engaged in a war and they are under martial law. So they're going to need as much energy as they can get for domestic consumption. And this is an article from the World Economic Forum website that I commented on in a video a couple weeks ago. It's titled, "Europe Can Replace Its Lost Russian Energy Supply with This Surprising Partner." And I'll spare you the suspense. We'll scroll down to the end of the article here. And the partner, the surprise partner that the World Economic Forum was suggesting that Europe begin getting energy from was none other than Ukraine. And at the time this was published and I was commenting on it, I said that this was a ridiculous idea because Ukraine is far too busy being invaded by Russia and trying to fend off that invasion to worry about bailing the EU out of its energy crisis. And now we have seen that that is indeed the case. Another disruption to the European energy supply that we saw a few days ago was the explosion at the Freeport liquid natural gas facility located in Texas. And this is a big plant. It's responsible for about 1/5 of the U.S. gas liquefaction capacity. And so when this explosion occurred, we saw the price of U.S. gas fall, as it meant that we wouldn't be able to export as much to Europe, and the European price moved up a bit. And originally, Freeport had reported that it would take about 3 weeks to repair this plant and get it back online. Well, today they revised that estimate to 90 days, so it's going to take quite a bit longer to repair this facility and get it up and running than they had originally thought. And this could not have come at a worse time for Europe, and we're going to talk about why in just a moment. But first, I do want to say a big thank you to today's video sponsor, Silver Botanicals, household and personal hygiene products that utilize the power of nano silver. You can head over to silverbotanicals.com to check them out. There's a link in the description, and don't forget to use coupon code STACKER to save 10% off your order. Now, the reason that this is such bad timing for the EU is it comes right at the same time that Gazprom has announced that they will be reducing natural gas flows through the Nord Stream pipeline, which is a key pipeline delivering Russian gas to Germany. They're going to be reducing that by 40% due to technical issues. Now, I don't know if there's actually technical issues with this pipeline or if this is just Vladimir Putin's way of saying thank you for the billions of dollars of weapons that are being delivered to Ukraine. That's anybody's guess, and I'll leave that up to you to decide. But regardless, this is going to cause a lot of problems in the European economy. And on that news of reduced Russian supplies and also the U.S. liquid natural gas facility delay in repairs, the price of natural gas futures in Europe has surged. And so, the market there is getting very tight, and this is going to be bad for Western economies for a number of reasons. First, this is going to create further inflationary pressures for the economy in Europe. And also now, some European factories are being forced to shut down due to soaring energy prices and also speculation that Russia may cut off the supply of gas completely. And this article points out that energy-intensive industries such as steel, chemical, and fertilizer manufacturing are shutting their European factories amid rising costs and concerns that Russia may cut off its supply. And that's per the Wall Street Journal. And this is an example of how higher energy prices manage to work their way through to just about every other product in the economy. And not only is this going to mean that there will be more inflationary pressures on prices, but also there will simply be shortages of certain key products. We're already seeing shortages of fertilizer, and so this is going to confound that problem even more and lead to more problems with food shortages and really just rising costs across the board. Because when you think of something like chemical manufacturing, I mean, that goes into tons and tons of consumer products, steel, also, appliances, automobiles, buildings, all sorts of things rely on steel. And so this is going to be an extremely heavy burden for Western economies that are already on the brink of recession to bear. And it's not looking good. The economic news is getting worse every day, it seems like. So now I think it's just a time to get as prepared as possible, because even though prices are high now, I think they're going to get a lot higher. So, you want to make sure you have your emergency food. You want to make sure you have some backup energy systems if possible. You want to just take whatever precautions you can to get as prepared as possible. And to the extent that you have disposable income and you're looking for a safe place to put that, I know where I would want to have it in hard assets like gold and silver, as this recession and inflationary depression bear down on us. Hard money, I think, is going to be the place to be. And gold and silver are still extremely cheap at today's prices. They are very undervalued relative to other commodities such as crude oil. And I do think that there is going to be a reversion to the mean in those relationships, and gold and silver are going to be moving up in a very big way as investors realize what the truth is regarding inflation and the recession and the coming economic crisis. So let me know what you think in the comments down below. Thank you all very much for watching. I really do appreciate everybody who watches and supports this channel. If you haven't subscribed yet, click that subscribe button, and I'll catch you next time. Smart Silver Stacker, out.